Hey everybody, this is Jim at SP500chart.com. It's about quarter after 5 on August 14th, 2016. We're going to take a look at the S&P 500 chart, see what happened this past week, what happened on Friday, and see if we can make any sense of it going forward. Before we take a look at it, I need to remind you as always that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, starting out on a weekly chart. What does that mean? Well, that means each one of these candles is a week of trading. You might say, where's last week? It's right here. You almost can't see it because the week closed closed just 1.18 over the prior week's close, which is almost nothing. And we also traded in a very narrow range. If we zoom in on this just a little bit, there is our candle for this week. Now here's why I'm starting out on this weekly view. It is worth noting that even though the week is something of shows a period of indecision in that we did not close significantly higher than last week. If you look at the range of trading, it was all above the average of the prior week. So that's kind of an interesting situation. As a matter of fact, there is a chart candlestick that is a variation of the open and close that's available at freestockcharts.com. If you go to this tool right here and go to plot style, instead of a candlestick, you can go to what's called a Heiken Ashi, or I'm not sure, I may not be saying that right. But basically, that is a different way of calculating what that candlestick looks like, and look at the difference there. That's because we start at the midpoint of the previous week's close, and well, it's kind of an interesting formula. This is where we actually closed here, but the next week that we start here, our trading will start at the midpoint of this candlestick. But for the sake of consistency, we're going to go with our regular pattern here. So, if we zoom in and look at a 15-minute chart, there you can kind of see what took place over this past week. The week started here on the 8th. We recognized a descending wedge, which was a spot-on call. We broke out over that wedge. That wedge indicated we would be re-challenging the mid to high 2180s, which we did. Interesting to note too that on Friday we bounced on this line right here, and that is the resistance line that we'd been looking at for about the past 3+ weeks. So maybe this is an indication that we are ready to move up, because the driving force in the markets right now is this big inverted head and shoulders pattern. That is I believe, the single most predominant feature in the chart. If we look back on a weekly chart, you can see that this is a pattern that is of a significant size. It's not quite as large, but it is almost the same size. Not quite, but it's the largest inverted head and shoulders pattern we've had since 2011 and 2012, and we all know what that meant. That was when we started out and saw a low actually of just over 1,000 or I should say under 1100, and that touched off a rally that would essentially go almost unchecked until we got over 2000. I'm not saying we get the same kind of thing here, but this is a significant pattern. And if you look at it, you could draw some interesting similarities between what we got going on here and what we've had going on right over the past year and a half to 2 years. So, that said, the weekend review, again, very simple. Nice gap up on the 5th. That was last Friday. Consolidation into a bull flag in the form of a descending wedge. Breakout from that wedge on Thursday. Pull back to support right here. This looks to be a decent spot where we could continue this rally. We won't know, however, until we see it happen. But it just sort of, to my eye, looks like we're about poised to head up this week and to get over this consolidation range in a more convincing manner than anything that we've seen so far. So guys, I can't really think of anything else other to add to that. Just remind you, we've got a target based upon that big inverted head and shoulders pattern, and that target is at about 2460, and we're not there yet. Not really even close. Look how far we have to go before we get there. And I think we have a very, very good shot at doing just that. So guys, I'm going to let you enjoy the rest of your Sunday, and I'm going to sign off now and just thank you for taking time out of your day to watch this, and always thank you for your support, and take care.